Present.
Trustee Martin,
Present.
and I note we have Trustee Kemmler as well, though
Yes,
he's
I'm
not on
here.
the committee. Good morning.
Okay, good morning. I'd like to remind the participants to please leave your mics muted when you're not speaking. And I'll go to tab 1 for the Audit Committee Fiscal Year 2026 work plan. I'll turn it over to Tracy.
Thank you, and good morning, everyone. So we have 2 audit committee meetings every year, as you know, and today you're going to hear about the annual financial report, and also you'll hear from our auditors, Clifton Larson Allen, or otherwise CLA, for required communications letter, their summary of the financial statement audit results, and emerging accounting issues and best practices and things like that. And then also you'll hear later from me in executive session initially, and then with a resolution for the external auditor contract extension as it's concluding, their current 7-year contract is concluding with this fiscal year's audits. And then finally, you'll hear from the UMaine Department of Athletics regarding their agreed upon procedures report. And this fall report is about eligibility certification, extra benefits reviews, student employment, and it varies depending on the compliance areas as they cycle through each period. And then in the spring, you'll hear about the Uniform Guidance Single Audit Report, as that's due to the federal government on March 31, and they'll deliver, the auditors and Darla will speak to that. And also the planning for the coming year, if they are our auditors. Otherwise, we will work through an RFP process, and you'll be hearing from some auditors on planning anyway, as well as their required communications. And then again, we'll hear from the Department of Athletics on their financial audit if it's ready. And we also, because from time to time you meet about risk and safety management, and so Nate Anaya has committed to coming in the spring. We didn't get that in time to modify the work plan, but so we've added him to our spring agenda as well. Happy to take any questions.
Thank you, Tracy. Are there any questions or comments for Tracy? Seeing none, I'll turn it over to Darla, the annual financial report.
Okay. I guess the first thing I'll ask is, will jazz hands work?
Yeah, that's right.
So good morning, everyone. As Tracy mentioned, I'm here today to walk you through the University of Maine System's 2025 annual financial report. And you'll find this report in tab 2.1 of the materials. And just a quick note, it is still in draft form as we're waiting for board approval of the financial statements later today. And to make things easier, as I've done in the past, I'll walk through the PowerPoint presentation in tab 2.2. But before we jump into our discussion, there are many people that are involved in the audit process. And I want to recognize and thank a few of those groups. So first, our auditors at CLA, all the campus and system personnel that who prioritized our many data requests despite their already busy schedules. And of course, my team for all their hard work in helping us get to this point. And I especially want to recognize, again, Janice Elsmore, our Assistant Director of Accounting. Janice has been leading the system side of the audit since 2009, and she prepared most of the financial statements that we're discussing today. So now we are still trying to wrap up a few loose ends with the audit. Mike Johns from CLA will give you an update on that a little later this morning. So, and with that, I have to remember to share. Okay, if we turn to slide 2, you see the topics for this morning's discussion, but we'll spend most of our time in slides 7 through 11 covering the system's financial performance for FY25 and also its financial position as of June 30th. So those of you that have been on the committee for a while have seen this slide before. So it's just a reminder that there are 3 sets of financial statements in the annual report, one for the system itself, one for the system's discretely presented component unit, which is the University of Maine Foundation, and then a 3rd set that was added a few years ago, covering funds like student activity fees that the system holds in trust for other entities. Now, to me, the most important slide that there is, the independent auditors report, the opinion section. And I already warned Mike Johns that I was going to steal his thunder yet again this year. And I'm happy to report that in the draft, we do have an unmodified, or what we call a clean opinion. So that's the best type of opinion you can have. And with that, I'll jump over to slide 5. Now, we did have a couple of changes this year in accounting that impact the financial statements. Here we see that there was a new accounting standard from GASB, that's the Governmental Accounting Standards Board, plus updated guidance from NACUBO, the National Association of College and University Business Officers. Now, the new GASB standard is Statement 101 on compensated absences. This statement changed how we account for things like vacation leave and sick leave. We've always recorded vacation leave as a liability because employees are paid for unused vacation time when they leave the system. But now we also have to recognize liabilities for other types of compensated absences like unused sick leave and compensatory time. Now, implementation of this new standard added, it's not a large liability, $3.4 million to our financial statements. We restated our FY24 beginning net position, the accrued liabilities, and institutional support expense for FY24 to bring on this new change. And since sick time isn't paid out when someone leaves, the liability is based on management's estimate of our hours that are more likely than not, and that's GASB language, to be used and paid while the employee is still working for the system. And to give you some perspective of the term more likely than not, the liability we recorded for sick time represents less than 3% of the total dollar value of all outstanding sick time hours at June 30th. Now, the other change, while NACUBO doesn't set accounting standards, they're not, the guidance they provide isn't considered part of GAAP or generally accepted accounting principles. They do provide practical guidance to higher education institutions on how to implement a GASB standard. Now, NACUBO's advisory report shown here, 2023-01, addresses how public institutions should account for and report financial aid as a discount, or that is an offset to student fees. In our financial statements, you see it referenced as the scholarship allowance. Now, the new guidance replaces guidance that NACUBO first issued way back in 2000. And under GASB standards, this new methodology is considered a change in estimate. Thus, it only impacts FY25 and future years. We didn't restate FY24, nor were we allowed to restate FY24. So now we calculate the scholarship allowance at the student level, which generally generates a higher percentage of total financial aid getting reported as scholarship allowance, offsetting student fees revenue rather than getting reported as student aid expense. So let me show you what the impact of the guidance looks like when we turn to slide 6. So here I've shown the allocation for FY25 and the 2 prior fiscal years, and you can see the impact that the new guidance had with the jump in the scholarship allowance column. For FY25, the scholarship allowance now represents 94% of total financial aid, compared with 83% in the prior 2 years. Now that we've covered the accounting framework and changes in accounting practices, let's look at how the system actually performed. And we'll turn to slide 7. I'll walk you through our operating results captured here in a condensed statements of revenues, expenses, and changes in net position, or what we call the SHRECNIP. This condensed version shows the section totals that GASB requires in the full SHRECNIP, shown on the next 2 slides. So operating revenues at the top came in at $535 million in FY25, compared to $511 million in the prior year. And this increase was driven mainly by growth in federal, state, and private grants and contracts revenue, plus the related indirect cost recovery that goes with those grants. Net student fees were $262 million, essentially flat with the prior year's $263 million. Moving down a line to operating expenses, they were $885 million in FY25, reflecting a 4% increase over the prior year. And we saw increases in all expense categories except financial aid, as we'll see in a moment. Now, the operating loss was $350 million in FY25, compared with $340 million in the prior year. And as I've stated in prior years, it's important to remember that under the current GASB reporting model, we're always going to show an operating loss because we get significant support from the state appropriations and other revenue sources that GASB requires us to classify as non-operating. And then that brings us to those non-operating revenues, which totaled $364 million in FY25 versus $348 for the prior year, an increase of nearly $17 million. Now, this increase is mainly due to a 4% increase in non-capital state of Maine appropriations revenue and a 28% increase in federal Pell Grant revenues. So then that brings us to income before other changes in net position of $13.8 million for FY25, up 75% from last year's amount of $7.9 million. And this line is what we, or the system, considers to be its return from operations. And you'll understand why in a moment. So next is the other changes in net position, which totaled $99 million for FY25. Those were also up from the prior year. They increased by 34%. And rather than support operations, revenues in this section support items on the statements of net position, items such as additions to capital assets, additions to endowments, and debt reduction. And within this section, one of the revenue lines is capital grants and gifts. And in FY25, those were $77 million, and they account for 77% of this $99 million total. And those capital grants and gifts include restricted sources such as the Harold Alfond Foundation Award supporting UMaine athletic facilities, and also Maine Jobs and Recovery Plan monies received from the state of Maine, just to name a couple. And finally, on this page, we see the change in net position for FY25 of $113 million, up 38% from the prior year's $82 million. Now, 88% of this total change comes from this line that I just mentioned, the $99 million in other changes. And if there aren't any questions, we'll move to slides 8 and 9, which show the full SHRECNIP. Now, I'm not going to address every line on these two slides, but I want to highlight a couple of items. First, look at the lines for scholarship allowance up here under operating revenues, and also student aid down here under operating expenses. Looking at these two lines, again, you see the impact that the new NACUBO guidance on how we split total aid between those two lines. And remember, this change applies to FY25 in future years, thus the large variances from the prior year. And as I mentioned a moment ago, student aid actually decreased, and it's due to that new NACUBO guidance. And as I mentioned earlier, net student fees here were decreased slightly, relatively flat. But as you can see, the gross student fees, which are comprised of tuition and fees and res and dining fees, actually increased $23 million or 6%. The second line I want to point out is the $13.7 million increase in institutional support expense under operating expenses. The system's centrally managed benefit pool was the primary driver behind this increase. And I won't go into all the complex workings of the benefit pool, but just provide a high-level description of how the pool works. I was looking through my notes, and it probably like 5 or 6 years ago that we last talked about the pool. Actual benefit expenses are recorded in the benefit pool as they're incurred, and that's under the classification of institutional support expense. Budgeted benefit costs are then allocated out to other functional expense categories using a benefit rate that we apply against salaries and wages in those other expense categories. And by other expense categories, I mean instruction, research, public service, etc. Now, if at the end of the fiscal year, actual benefit pool costs exceed the budgeted or allocated total, institutional support expense increases because costs stay in the pool, which again is included in the institutional support line. If at the end of the fiscal year, benefit costs are less than the budgeted or allocated costs, institutional support expense decreases because we've over allocated to the other expense categories. Now, the increase from FY24 to FY25 in institutional support is the result of benefit pool cost having been less than allocated costs in FY24, reducing institutional support expense for that year. In contrast, in FY25, the benefit pool operated at more of a break-even point, resulting in the FY25 institutional support costs being higher than those for the prior year. So that ends the discussion of the benefit pool. So now that we've looked at our operating results and other changes in net position, we'll move to the system's condensed statements of net position, or what we call the SNP, on slide 10. Now, total assets and deferred revenues stood at $1.7 billion at June 30th, 2025, an increase of $122 million or 8% over FY24. And I'll go over just a few highlights. First, cash and operating investments actually decreased $14 million or 5%. Now, this isn't reflective of the investment market because we actually did earn positive returns of 6.9% net of fees. However, so the decrease is primarily because the system fronted $22 million in construction costs for USM Center for the Arts while we wait to issue revenue bonds to reimburse ourselves for those costs. Now, moving to the next line, other current assets, they increased $16.5 million. And that increase is primarily related to a $12 million increase in grants receivable. Now, grants receivable can fluctuate year to year depending on the types of grants that the system receives and also the timing of reimbursements from grant sponsors. And the reimbursement or the timing of those reimbursements also impacts the cash and operating investments line that we just talked about. Moving further down the page, we see the $90 million increase in net capital assets. And this reflects increased construction activity as the system utilized various funding sources, including the $77 million in capital gifts and grants that I mentioned a moment ago in our discussion of the SHRECnet. Moving further down the page, we see total liabilities that increased. They were $476 million at the end of FY25, and that's only a 1% increase from the prior year. However, if you were to look at the individual lines, you see a significant increase in other current liabilities and a significant decrease in non-current long-term debt. Now, the $21 million or 19% increase in other current liabilities is mainly related to grant proceeds we received prior to incurring the costs. Generally, the vast majority of our grant contracts are arrangements where we spend the money and then we draw down and get reimbursed. But we do have a handful where they give us the money up front. So for those, we have to recognize a liability for the amounts that aren't spent yet. And of course, the decrease in long-term debt is the result of the system making their scheduled debt service payments. Now, finally, on this page, if we look at the dollar variance column for the total net position line, we see the $113 million increase in net position that we saw earlier when we discussed the SHRECnet. Now, this change brings total net position at June 30th, 2025 to $1.192 billion. So let's look now at the composition of our net position. If we move to slide 11, it displays the amounts and percentages associated with each of the 4 required categories of net position. And the June 30, 2025 percentages for each category, they're relatively flat with the prior year. But I do want to make a couple of comments about unrestricted net position. First, it decreased $8.7 million from the prior year. And that decrease mainly relates to my earlier comments about fronting $22 million in construction costs pending issuance of revenue bonds. Once we issue those bonds, unrestricted net position will increase as we receive the cash proceeds to reimburse costs, and net position invested in capital assets will decrease as bonds payable offset the funded capital assets. So when we issue the bonds, there's no impact to total net position, just a shift between the 2 categories. The other thing I want to note about unrestricted net position is that although it isn't subject to external restrictions, the resources are certainly critical for the system's financial stability and have been designated by management for specific areas as shown in note 10 to the audited financial statements. So that completes our discussion of the system-wide financial statements, and now we'll turn briefly to the fiduciary financial statements. So on slides 12 and 13, you see condensed versions of the 2 required statements for the fiduciary funds. Here on slide 12, we have the statements of fiduciary net position, and on the next slide is the statements of changes in net fiduciary, statements of changes in fiduciary net position. And I'm just going to highlight one item, and that is the total liabilities line here on slide 12. As you can see, total liabilities decreased $29 million from the last year, and this is because the University of Southern Maine Foundation removed their assets from the UMS endowment pool on July 1st, 2024. And that's it. We've completed our walkthrough of the FY25 annual financial report. In closing, the draft financial statements reflect a clean audit opinion, 2 accounting changes, an increase in gross student fees, but a slight decrease in net student fees, an increase in net position of $113 million, driven primarily by $77 million in capital grant and gift revenues, and total net position at June 30th, 2025 of $1.192 billion. I appreciate your time, and I'm happy to take any questions the committee might have.
Thank you very much, Darla. It's very riveting. Appreciate it. No, in all seriousness, I mean, this is good news. It's excellent. I just have one quick question, and I'll Trustee McMahon is based upon the prior audits. Are there any areas you believe that warrants a closer board oversight this year?
None come to mind. I don't know what Tracy and Ryan's thoughts are, but there's nothing that I can think of.
Okay. Trustee McMahon?
Darla, can you just summarize where we are with coronavirus recovery funds? I know all the federal funding has been spent, and we got, I think it was 35 million from the state, which we have been spending. How much of that is left, and is it all allocated in some way?
I believe it is all allocated in some way. I'm trying to think if President Freeney Monday's on the call or not. But it is allocated. I think.
Hey, Darla. Yeah,
Yes.
I can jump in on this one.
Okay.
Sam, I'll give all the credit to Sam here, is tracking that on a regular basis. We're in regular communication with the state on all of those agreements. As you noted, we've got a timeline to spend those. So I was on an email exchange just 7 minutes ago that Sam was responding to where, we're spending down a grant. We've got a small balance left. And so we're figuring out what we do with that balance. So I think everything there is on track to be spent in the timeline that the state has given us. With all credit to Sam and then the folks out at the campuses that are actually spending these dollars.
Yeah. In a lot of those.
In fact, without notice, but I was just curious because obviously it's one-time money that's not going to come back, hopefully.
Right, and a lot of those monies are being used for construction type projects. So we see the impact of those monies in this line here on the SHREC, other changes in net position under capital grants and gifts. So especially, I think a large amount was allocated to the GEM facility, green engineering manufacturing, I think. And so that gets reflected in this line as we spend the monies. Any other questions?
Any other questions, Dave, or any other members? I don't see any. So I'll read the text of the resolution that the audit committee forwards this item to the October 24th, 2025 special Board of Trustees meeting for approval of the following resolution. That the Board of Trustees accept the recommendation of the Audit Committee and approve the fiscal year 2025 annual financial report as presented. Can I have a motion?
So move.
Moved by Trustee McMahon. Is there a second?
Second.
Trustee Martin. Beth, will you please take any discussion? If not, Beth, will you please take the roll call?
Trustee Mishu,
Yes.
Trustee Riley,
Yes.
Trustee McMahon,
Yes.
Trustee Martin,
Yes.
the motion carries.
Thank you very much. Appreciate it. Moving on to tab 3, the auditor's communications to the audit committee. See Mike's here. So Mike, I'll turn it over to you. Mike Johns.
Good morning, everyone, and thank you for having me.
I see a lot of familiar faces, but for those of you who I have not had the pleasure of meeting, my name is Mike Johns. I'm with Clifton Larson Allen. We go by CLA, and I'm here to present the year-end audit results. I have a PowerPoint presentation, and let's see if I can share my screen. Can everybody see PowerPoint presentation? Great. So what are we going to talk about today? The annual audit process. We're going to talk a little bit about what CLA was engaged to do and how that process went. We are going to talk about the opinions that we issued as a result of that process. You know, you have draft financial statements right now. The process to get those to final and signed with a signed audit opinion. We're going to go over some industry insights and some thought leadership, and we are going to do that all within the time that was allotted to us. So, what was CLA engaged to do? We were engaged to express an opinion on the system's financial statements for the year ended June 30, 2025. So, the way that process works is management is responsible for the closing of the books and the preparation of those financial statements that are in accordance with generally accepted accounting principles. Once that process is complete, CLA comes in and we perform various tests and walkthroughs and confirmations so that we can express an opinion on management's work. As part of that process, we are required to gain an understanding of the internal control system at the system. We do not, however, express an opinion on the internal controls. That does not happen during a financial statement audit. However, in gaining that understanding, if we came across anything that would be classified under our professional standards as a material weakness or significant deficiency, we would be required to report that to this group today. Because of the federal grants that the system receives, we are also required to perform our audit in accordance with government auditing standards, which adds a little bit of requirements to the general audit standards. We are required to make certain required communications. That's what we're doing here today. This slide deck covers a few of them, or all of them actually, and you also have a formal letter that's in draft form right now that will be released when the audit is released. The state requires the preparation of what we call supplementary information, which assists them in getting the system's financial information into their financial statements. We don't express an opinion on that other than in relation to opinion to the financial statements. And we were engaged to perform what's called a single audit. That is the audit of compliance with major federal programs, and we'll talk about the status of that in a bit. That audit is not due until March 31st, and this year, as has done in past years, we don't issue the single audit with the financial statement audit, and this year we wouldn't be able to anyway. So that's a cliffhanger to stay tuned for our next slide. So what is the audit process? We're required under our professional standards to perform what's called a risk-based approach. So before we do any work, any testing, we get together as an audit team. We meet with management to see what happened, what's different at the system, what happened during the current year, anything new and exciting. We look at the industry, we look at the general economic environments, we look at any new accounts, and we put a heat map together or a risk assessment together. If something was going to go wrong, where is it more likely that it would go wrong? And then we design our audit procedures based on that risk assessment. And that risk assessment is an iterative process that can change as we perform our required auditing procedures. But some just areas to highlight, some areas of focus that we looked at. I mentioned we don't express an opinion on internal controls. However, we do perform various tests of the control environment to enable us to perform our substantive procedures. So we performed tests of controls this year over the payroll disbursement cycle, the general expense cycle, what we call non-exchange revenue cycle. That would be grants and appropriations. And we have our IT specialists come in and take a look at general IT controls that would impact the financial systems at the system. That's system at the system. That sounds horrible, but um, we also, for investments, we are required to look at those alternative investments. Those are investments that don't have a year-end value that's published on a market, such as the New York Stock Exchange. So we had to perform some other procedures, and we actually use a specialist to look at the fair value of those alternative investments to ensure that the fair value is properly reported. Uh, Capital assets is a very large number on the system's financial statements. We do tests of the additions and disposals and related depreciation expense to ensure that that balance rolls forward appropriately and looks complete and accurate. Various liabilities, um, so there's the pension and OPEB liabilities of those are the benefit plans. OPEB is other post-employment benefits. The system hires an actuary to calculate the year-end liability for those plans or asset for those plans. And that's based on some significant assumptions. So we look at those significant assumptions, the qualifications of the specialist, and the inputs that go into those calculations in auditing that those liabilities are reasonably stated. Darla did a great job of going over the new accounting pronouncement for compensated absences, so I won't repeat that. But because there was a new standard, we did have to test again, it's an estimate, so we had to test the inputs and assess the reasonableness of that liability. Darla mentioned the more likely than not criteria. That's really where we focused our procedures. Liability completeness, just ensuring that the liabilities are complete, looking at events that took place after fiscal year end, including cash disbursements, getting the supporting documentation, and seeing if a liability should have been recorded as of the fiscal year end. Of course, this isn't an all-encompassing list, just a very high level of some of the procedures we performed and some of the higher risk areas that we looked at. Darla stole my thunder, but we will be issuing an unmodified opinion on the financial statements. That is the highest level of assurance we can provide as independent auditors. And in terms of internal control comments, we did not identify any material weaknesses or significant deficiencies in the internal control structure that would be required to be reported under government auditing standards. So clean opinion, no significant, or I'm sorry, no comments at all, no material weaknesses or significant deficiencies. As I alluded to before, we are engaged to perform the federal single audit, that's the compliance audit, and that audit, really as auditors, what we have to follow is called the Federal Compliance Supplement. It's a very long document that's issued each and every year, and it is a listing of background information and audit procedures that the federal agencies want the independent auditor to audit as it relates to various grants and contracts. That document is generally released in the May timeframe each year and then becomes effective for the end of June. That document has not been released for 2025 as we sit here today. It's the latest it's ever been, and no CPA firm can issue a single audit without that document because that document spells out what the federal government wants us to look like. So as we sit today, we don't have it. We do not know when it will be released. The latest we heard is that OMB, they're the folks who published the final document, won't be looking at the issue until the budget or the government shutdown is reconciled in Washington. We're unsure as if to any extensions will be given because of the significantly late issuance of this document. The traditional deadline is March 31st. It still is March 31st, but there could be an extension. And I will say that we haven't not begun that process just because of this. There are drafts out there, so CLA has been auditing the major programs that have been selected and gotten to a point. So it's not as if we're starting the whole single audit once this document is released. But just want to notify everyone on this call that there is a significant delay right now, and we're not sure where it's going to go. Those required communications I noted earlier. So there were no changes in the scope of the procedures, or I'm sorry, the scope of what we were engaged to do from our initial meeting back in the spring. We are required to audit the disclosures to the notes to the financial statements, and we found them neutral, consistent, and clear. We talked about the adoption of the new accounting principle. We had no difficulties working with management during the course of the audit. We noted no issues where management consulted with another independent CPA on either accounting or auditing matters. The financial statements do contain significant estimates. We talked about a few of them, and we're required to report that just they are estimates as of a point in time. We did audit those estimates and found the inputs and methodologies to be reasonable, but those estimates can change significantly as time progresses due to various external factors that can cause variability in those amounts that are calculated. We did not identify any material audit adjustments. So when we began our audit, we get a trial balance, and that's where we start performing our tests. And that trial balance that we got at the beginning of the audit is the same numbers that you see reflected in the draft financial statements that you have to review. So that speaks very highly of the internal control process and the financial management at the system, in that we did not identify any material errors during the performance of our procedures. Some industry insights. Just we threw a couple of slides in here to talk about what we're seeing as we work with our higher education clients across the country, and maybe what other groups of management or governance are talking about from the meetings that we attend. And I think that the uncertainty is the key word right now. Uncertainty in terms of regulations coming from Washington. There's concern with the fewer staff at the Department of Education. Student financial aid is a very, very complex federal program to navigate through. And there's just concern that we're hearing from student financial aid administrators with less folks in the Department of Education available, that it could cause challenges in administering those programs. We've all heard the recent news with higher education and the administration, and some non-compliance that's been identified, and news with indirect cost rates and those types of items. So if I flip the slide here, what we're seeing a lot is, okay, there was litigation. The agencies who were going to insert a 15% cap on indirect cost rates didn't happen right away. But looking forward, what are the impact on our financial results? What are the impact on those research and development grants if this comes through, or when it comes through, if it comes through? Again, there's a lot of uncertainty, but indirect cost rates currently are much higher than 15% on many of these federal grants. And so I'm seeing a lot of talk about what happens if they are limited, what happens if we were to lose a few, what do the budgets look like going forward, how would we fund those potential losses of indirect cost recuperation. The other thing I'm seeing a lot of, or hearing a lot of folks talk about, is just based on the news with certain schools who found themselves out of compliance with certain laws and regulations, and then related settlements with the federal government, just as a review of internal policies and procedures, making sure that based on the current information that we have about what's being litigated, about what's out there from the Office of the President, that the current policies and procedures appear to be in compliance with what's going on right now. Going back a quick second, we're also continuing to see the bad actors who look to hack systems and hold them for ransom, getting folks getting better at what they do. So just the risk of making sure our data is protected, and unfortunately, because of that, we see the costs going up there. And we're continuing to hear folks looking at the budget just with enrollment pressures. It seems to be affecting different universities in different ways, but just making sure that everyone's keeping a close eye on how enrollment is looking going forward. So you may have heard there was a bill passed this past summer called the One Big Beautiful Bill Act, and there were some impacts there in higher education, specifically related to, want to talk about the impact to our students and some of the changes there. So generally, there were provisions that reduced potentially the amount of federal aid a student can receive based on the new law. So there was an elimination of Pell Grants for students who received aid covering their full costs of attendance. There was also an elimination of Graduate Plus loans that will no longer be available. And all these changes take effect in the 2026 calendar year. For parents of students who are able to borrow, before the change, they were able to borrow up to the student's cost of attendance, less other aid. That amount has been reduced to $20,000 per year per student, with a cap at $65,000 lifetime. For graduate students, the loans were capped at $2,500 per year, with a total cap of $100,000. And professional loans were also reduced and capped at $50,000 per year, or a lifetime of $200,000. So these changes and a couple of others, some folks are taking a look at, especially if they have significant graduate or professional programs. Will there be an impact in our students' ability to be able to pay the tuition costs, and all the changes to the student financial aid provisions result in less resources to pay for tuition, but it really depends on the demographic makeup of the student body, and again, how many folks on the graduate and professional level are taking advantage of some of these student financial aid programs. There was an accountability provision included in the OB3, where there's going to be compliance, where universities are going to have to track gainful employment statistics, where programs with a student with an undergraduate degree earn less than the median high school graduate. There could be a loss of eligibility to apply student financial assistance to students who enroll in such programs who have that issue. The endowment tax changed prior to the OB3. There was a flat rate of 1.4%. You had to have 500 students, and the floor to have the excess tax was $500,000 of endowed assets per student. The new rules, which are better than maybe we thought they were gonna end up, it's a graduated rate depending on the tax. So why do you have to have at least 3,000 students But instead of just a flat 1.4%, you have to do the calculation of endowed assets per student. And if you're in that 5 to 750, you have 1.4% tax, 750 to 2 million, 4% tax, and over 2 million and 8% excise tax. So this is just informational. Um, and right now, I've been asked the question before, especially in the public university space, does this apply to supporting foundations and their endowed assets? And currently it does not. CLA doesn't let me use my magic 8 ball anymore, but I did ask this question of our national tax advisor, and she believes, and just an editorial opinion, she believes that it's a matter of time, not if, eventually that this tax finds its way to um, nonprofit organizations who support public institutions of higher education. But again, that's just her insight on it. I will not go over GASB 101 because Darla did such a great job in presenting that. Every winter, we do a external webinar that you can take from the comfort of your own home, going over everything that's new and good in higher education. And I promise it's not just accounting. I think of the 8 sessions, we only have one accounting session, which I do. So if you see me, you tune out. But the other sessions are very informational. So should you be interested, there's a QR code here. And happy to answer any questions or any feedback anyone may have, and I'll stop sharing my screen if I can find the right button to do so.
Well, thank you very much, Mike. It's really appreciated, and it's a good report. So I just have a few questions. With all the changes happening in DC, are there any significant changes in your audit approach this year compared to last year?
Specifically related to those changes, no. Really, when you think about the litigation you're hearing about or the non-compliance you're hearing about, that's a legal issue that would be caught if there was such an instance at the system. It would have been surfaced through what the work we do with your attorneys, both internal and external, in looking at if there are any liabilities that the system may have related to non-compliance that impact the financial statements. So where it will become interesting is when that compliance supplement's released, because that's really, excuse me, the place where we test compliance with federal laws and regulations. And if there's anything new in there that could significantly change, I'm not anticipating it this year. It may be something next year that could come into effect. But the short answer is not too much impact because the procedures we're covering really cover if there's any unrecorded liabilities there.
Okay, great. Another question I actually asked Dollar, I'll ask you as well, is based upon the prior audits, are there any areas you believe warrant closer board of trustees oversight for this year?
It's a clean audit, so from that standpoint, no. If I was sitting on a board, a member of governance, what I would be keeping an eye on, and I'm sure management is well tuned into, are these changes that could impact the financial results of the system. So if there is a 15% cap, or new agencies introduce a 15% cap, I would want to see what those pro forma or projected financial statements look like and what the plan is, which can go in many different directions. And then just keeping my eyes and ears tuned to the news from Washington, keeping on top of regulatory matters and litigation that's currently going on, and maybe hearing from folks such as internal counsel or internal audit, just based on what's going on in the industry. Is there a risk at the system?
Okay, great. My last question is, how do our internal audit controls compare to other higher education systems that you audit?
So, based on our testing, I do believe, based on my personal experience in working with other systems across the country, you have a very well designed system of internal controls, and you have a very high functioning financial management team overseeing those controls. It's a breath of fresh air working with the University of Maine system compared to sometimes when I get into other situations in the audit, in that it's well documented, the controls are followed. It's rare we have any deficiencies identified. So I think you have a very good finance team and well functioning set of internal controls.
Well, that's great. But we know, we just wanted to have you say it. So,
Of course.
yeah, no. Are there any other questions? I can't see everyone because of the.
I'm sorry, I can't find out how to close this.
Yeah. Well, if there are no other questions, I'd ask staff to. I know Beth is going to put you in the waiting room. We'll come back later on. We got to go into the executive session now, but for the staff, please wait in the waiting room. So, could I have a motion for the board of, if there's no other questions, for the board of trustees meeting to go into executive sessions under the provisions of one, MRSA Section 4056A, discussion or consideration of employment, appointments, assignment, duties, promotions, demotions, compensations, evaluations, disciplines, resignation, or dismissal of an individual, appointees, or employees of the University of Maine system or any individual university, or the investigation or hearing of charges or complaints against a person or persons subject to requirements of 1 MRSA, Section 405, and 1 MRSA, Section 405, 6G, discussion or approval of the content of examination administered by a body or agency for licensing, permitting, or employment purposes, consulting between the University of Maine system and any entity that provides examination services to the University of Maine system regarding the content of an examination and review of examinations with the person examined.
So
The
moved.
long one. It's been moved
Second.
by
So moved.
trustee Martin, seconded by Dave. Beth, will you take the roll?
Trustee Mishu,
Yes.
trustee Riley,
Yes.
trustee McMahon,
Yes.
trustee Martin.
Yes.
I'll move you into breakout rooms, and some of you are going temporarily into the waiting room, and then will be moved into executive session.
You think we got everyone? Okay, the next item is tab 4, the external auditor's contract extension. Okay, I'll repeat it. The next item is tab 4, the external auditor's contract extension. Are there any questions or comments? I know we've had a lot of discussion about this. If not, I'll read the text of the resolution that the Board of Trustees, acting through the Audit Committee, approves the extension of CLA's contract as the UMS external audit firm for the fiscal year ending 2026 through 2028 at the fee provided in their May 19th, 2025 fee proposal. Are there any questions? If not, can I have a motion?
So
So
moved.
moved.
Moved
A
by
second.
Trustee McMahon, seconded by Trustee Martin. Beth, will you please take the roll call?
Trustee Mishu,
Yes.
trustee Riley,
Yes.
trustee McMahon,
Yes.
trustee Martin,
Yes.
the motion carries.
Thank you. The last item is tab 5, the University of Maine Department of Athletics draft agreed upon procedures report. And is Gavin with us? I don't see him. Do you want to try to give him a call, Beth, see where he's at?
Yes, I will do that.
We're about 10 minutes ahead of schedule. Chancellor Malloy, do you have any comments while waiting for Gavin? Oh,
You're muted.
you're muted.
Said, yes, I'm waiting with all of you. That's what.
Okay.
Chair Misho, can I take a quick bathroom break?
Oh, absolutely. Yeah. Why don't we take a 5-minute break then?
All right, thank you.
Yeah.
He should be signing on now. One moment.
Okay, thank you. Good morning, Gavin. How you doing?
Good morning. I'm doing well. How are you?
Doing well, thank you. Well, we're on tab 5, the athletic draft agreed upon procedures report. So I'll turn it over to you.
Perfect. Good morning, everyone. Thank you for having me with you today. As you are aware, we do an annual audit on our compliance procedures in athletics. Each year, they will choose various areas within the scope of compliance to review. This year, they chose initial and continuing eligibility, student employment, as well as some extra benefits. In completing their review, they establish if we obtain the desired outcomes in each area that keep us in compliance with NCAA regulations, as well as engaging us with our processes to see how we achieve these outcomes. In one of the areas they assessed being initial eligibility certifications, they took a sample of our freshman class across a range of our programs, and they examined the NCAA Eligibility Center account certification to see if they were indeed certified and when. Also established when the first competition is for each of their sports, and if they were certified prior to this. If not, they then query if the student athlete did in fact participate in that period of time for competition. Continuing eligibility, as always, is making sure that student athletes are taking the right amount of classes, that they're making progress towards degree requirements, and that they declare a major by their third year of college. With student athlete employment, they took a sample of our student athletes that had said that yes, they would be seeking student employment during the academic year last year. The auditors will just look to see that they've completed the institutional compliance form and that some of these students were paid according to the appropriate scale. For extra benefits, they looked at stuff like our apparel and equipment in terms of the items that we provided to the student athletes was correct. Also in instances of where an item had to be returned because the size was too big or too small, that the student athlete did in fact return this to the equipment room. The auditors also reached out to a sample of our boosters to determine their knowledge of NCAA rules and regulations, just to see like what what was their knowledge on NCAA rules and regulations. Were they aware of what they can and cannot do, such as like giving a student a car? And that booster information was readily available to them when they attend our games, such as like the Skybox in the Alfond Stadium, or the club section, or the boxes in the Alfond Arena. There was a very positive response from this. Actually, we had 9 out of the 10 boosters that were asked actually did reply back with positive responses. But in looking at each of the reviewed topics, the auditors assessed that the required process was followed, but also identify who within the athletic department has responsibility in that area. So I suppose spoiler, each area, they basically dictate that the compliance responsibility lies at least with the athletics director for compliance, the athletics director themselves, the senior associate athletics director for compliance, the athletics director themselves, as well as the deputy director of athletics. They will then also amend it to each section and area. So for argument's sake, the equipment room would also designate the head equipment manager as someone that has compliance responsibility. The auditors also established that educational efforts and materials are provided to our personnel, like our staff, to ensure that we're keeping them informed of any changes and developments. The auditors basically we'll assess as well what kind of information we provide and how. So for in compliance, we do provide frequent email updates on votes, legislative changes, blanket waivers, and hot topics. We also provide like a monthly rules education session for that session, which is conducted by our outside consultant, Fortify College Athletics. They basically will keep it topical. So by keeping it topical, will be based on each month. So for September, that month is typically focused on recruitment certifications. So each year, coaches have to satisfy requirements to be certified to be able to recruit student athletes for next year, or in instances like baseball, softball, the class of 2027. Basically, this rules education session would satisfy that requirement. October, we highlight rules around signing dates that happen in November, as well as athletic financial aid agreements, if there's kind of like any changes to the terminology in the aid agreements, stuff like that. Basically, when a student athlete or prospective student athlete signs an athletic aid agreement for us, they have to cease contact with them, and that the student athlete in question will not be able to sign for another institution. Thankfully, I can say that the report overall is very positive. There was an item that was highlighted in the initial draft report regarding initial eligibility, where they basically stated that 3 of our student athletes may have had an issue where they may have competed, but once they followed up with us and the coaches, they confirmed that that was not the case and cleared us of that. Outside of the report, the auditors are very helpful, like in providing some generalized recommendations on items that they review. It can be on basically like process efficiency, but also highlighting instances of, while it was highly positive that 9 out of the 10 boosters did have a good level of knowledge of NCAA rules and regulations, there was still, of course, that one that did not believe they had all the information available to them. So it's a case of how can we ensure that next time, hypothetically, if they were to look at this again next year, that we do get a positive 10 out of 10 response. I would say the process is very beneficial to us in terms of assessing how we approach things. If we were doing it right, or if there was an issue, what can we do better? If they can provide advice on terms of how to be more efficient in our process. We did have a change of staff recently, as some of you are probably aware. So this process, I will say for myself and Director of Compliance, was helpful in keeping us focused on these areas as we were getting ready at that very point in time to actually transition to getting ready for this academic year. We also, of course, as mentioned, have assistants from Fortify who deal with rules education, but they also provide, for rules education, it's very team specific. So they will deal with like sports specific developments and queries, but they also help us in terms of like, they will help us with our waivers. They will review, like if myself or Director of Compliance submit something, they will review it to see like, has this been phrased correctly? Have we provided the right bylaws? But they also are available for like interp requests. Like if we have a scenario that comes up that we just aren't 100% sure of, we can always refer to them to see like, what are your thoughts? I would say internally, we basically use this report to give us like, how do we provide the best outcomes to our staff? So some things that we do is in the last year, we've started from the Director of Compliance. He has been providing them with a monthly recruiting calendar by sport, just so that they're aware of like dead periods, recruiting periods, just so that if there's an instance of where they have to shut down, that they're not incorrectly reaching out to someone. For me personally, last year I created like a slide deck, and this slide deck would just basically have all of our compliance forms in one. It would give them points on how to approach each form, like if there's a trend that I've seen of where a form has to be frequently sent back. This year, there was a few tweaks I had this year, but I got to include various developments like roster limitations from the House settlement. So that's something we'll probably continue to do with the occasional tweaks and updates each year. For myself as well, I do send a bi-weekly report in April. April is the certification window for the next year's class. So amateurism will open up around that time, and about the middle of April, I will send a bi-weekly report to our coaches just so they're aware of the certifications of their incoming class, and that basically they can keep on top of it. The benefit of that I've found with the continuous initial eligibility being reviewed each and every year, that has helped us basically mitigate any instances of where a person will compete or practice incorrectly. So we kind of use those kind of like reports and like our emails to reach out to coaches just to ensure that areas that will come up, that we no longer see issues really occur in those areas. There will be rare instances. But But yeah, that was everything I have with regards to the report. Do any of you have any questions for me?
Yeah, thank you very much, Gavin. Appreciate it. Are there any questions for Gavin? You don't see any, so thank you very much. Really appreciate it.
You're welcome.
So that's it for now. Don't need a motion to adjourn, and we're back on at what, noontime? So
See you
great.
at noon
Yep,
for the
see you guys shortly. Thank you.